Hello and welcome to this post-policy conference. With us today, we have Governor Shri Shaktikanta, Deputy Governors Dr. Michael Patra, Shri M.K. Jain, Shri Rajeshwar Rao, and Shri Ravi Shankar. So before we go ahead, sir, I would request you to give us some address, and then we will start with the question and answer.
Is it on? Okay. No, it's not an address. It is just a few opening remarks which I wish to make. I had made a similar set of remarks in the, I think in the April monetary policy when we had met last. Now, I would like to just touch upon some of the main highlights of today's monetary policy. First, obvious, we have retained the growth projection for the current year at 7.2%. Second, on inflation, we have revised our projection and we are now projecting 6.7% for the full year 22-23. And within that, there are 3 or 4 points which need to be noticed. First, 75% of this increase in our inflation projection compared to what we had made in April, 75% is attributed to food inflation. This is something which I had said in my statement also. And by and large, if you look at it, excepting factors like the tomato prices slightly going up or some domestic electricity tariff being revised by the states, primarily the food inflation spike is linked to external factors, namely the war in Europe. So that is the first point under inflation. Second is what we have given out is the baseline scenario without factoring in the steps that we have taken today. Third, we believe that our actions will have their impact in bringing down inflation and inflation expectations. We remain committed to bring down inflation and inflation expectations. Fourth, our actions are, our rate action and other actions are calibrated to the evolving inflation growth dynamics. Inflation must come down. Economic recovery also must continue. So I talked about growth, then I talked about inflation. These are 2 points. The third point I would like to mention about the rate hike and the stance. Rate hike, obviously, no-brainer. It is 4%. It is 40 basis points. And, 50 basis points. And I don't know why I'm fixated on 40. We did that last time. So it is 50 basis points. Sorry about that. So now the repo rate stands at 4.9. We have said that clearly. As regards the stance, as has been, as you would have noticed, we have dropped the word, we remain accommodative. That is mainly to give greater clarity to the market. But we have said that we are now focusing on withdrawal of accommodation. Now, what does that mean? It means that we are now completely focused on withdrawal of accommodation. But still, if you look at the rates, in terms of rates, we are still below, we are still below the pre-pandemic level. In terms of liquidity, the liquidity surplus in the market, surplus liquidity is higher than the pre-pandemic level. So that is what we mean. In that sense, the stance still remains accommodative, but we are now completely focused on withdrawal of accommodation, and I think this gives greater clarity to the market and to all the stakeholders. And to all of you who are who would be analyzing and writing about it. The fourth point is with regard to liquidity. Liquidity, I think there was a lot of speculation around CRR. We have not increased the CRR. The liquidity withdrawal going forward will be calibrated and measured. And we will ensure that adequate liquidity is available to meet the productive requirements, to meet the credit requirements of the economy, that is the bank credit requirements. And fifth and final, as I have very clearly mentioned in my statement, we are not, that is the RBI is not bound by any stereotypes and conventions. The RBI will continue to be dynamic and pragmatic in our approach. I'll stop here and we'll now take the questions. Over to you, Yogesh.
Thank you, sir, for the opening remarks. Sir, I will call out the names and then we will go with the questions. So first I'll invite Mr. Hitesh Vyas from PTI to ask his question.
Hi, sir. Good afternoon. So given that your inflation projection is at 6.7% for the full year, will RBI be aggressive in terms of hike, in terms of quantum of rate hikes?
You see, as I just mentioned and as I have said in my statement, that our future action will depend on the evolving inflation growth dynamics. The situation is fast changing and it will depend on how the situation evolves.
One thing on CBDC front, just wanted to know, is there a timeline in mind for its launch and what would be the likely channels for its distributions?
I would request Deputy Governor Ravi Shankar to take that question.
On the timeline, it was announced in the budget that it will be introduced this year. It will be introduced this year. Various technologies will be used. The only thing I would like to emphasize that the process of introduction would be gradual so that there is no disruption in the banking system or the financial system. Anything else you wanted on that?
No, I think you already asked two questions. So, okay, thank you. Right.
Thank you, sirs. I'll move on to Mr. Bijoy Dicheria from Informist Media.
Hi, sir. You've already indicated that till December you expect inflation to be above the 6% bound. That indicates that for the whole year you will be in breach of the 2 to 6% mandate. What does failure mean in this sense of meeting the mandate? What are the kind of procedures that you all will have to follow? And will, like, just to add to what Hitesh already asked, will this mean that RBI will have to be preemptive, maybe even in the liquidity withdrawal, maybe even in the pace of hikes and stuff that you all have to do to bring inflation back into the bound?
You see, in extremely uncertain conditions that we have, and in the context of extremely uncertain outlook, it is not possible to provide forward guidance on what you are mentioning. It will depend on how the situation evolves. With regard to what you are calling, it will be breaching the inflation target framework, etc. We will deal with it as and when the situation arises. The situation is very dynamic, so I would not like to speculate anything on that. The law is very clear and we will do accordingly, but as it stands today, I would believe that I would not like to speculate that this will happen and then we will do this. Internally, we examine all possible, all possibilities in various directions under various scenarios. And as I said, I am repeating again to the question there and to your question, it will depend on the evolving situation.
Is that why you've also dropped stance? Because Mr. Verma has also been talking about it for the last couple of policies that stance would be very difficult to give in a situation like this.
No, there is a stance. I have said in my statement that, and I just said now, in my statement also said that I have used the word stance, and our stance is withdrawal of accommodation.
Okay, thank you.
Thank you, sir. I'll move on to Ms. Lata Venkatesh from CNBC TV 18.
In your speech, you said that you are committed to normal monetary conditions in a calibrated manner. Can you elaborate on what you mean by normal? Is it 5.15, which is pre-pandemic? Is it 6%, which was, when you shifted from a neutral to accommodation? Or is it even zero real rate, which means 6.7% for 1 year inflation? So the repo rate will have to be a lot higher.
You see, the way I look at normal, I and my colleagues in RBI, and the way RBI looks at normal conditions, and so is the MPC. is that if you recall the February 2020 monetary policy framework which we announced, it is linked to the overnight rates. The critical factor will be not the quantum of liquidity or not any particular level that we have not speculated, or we have not said that this is the normal rate. All normal rate meaning the policy rate. All that we have said is that when the overnight rates are in alignment with the repo rate. Even currently, the overnight rates are below the current rate. They are below the repo rate. They are closer to the SDF rate. So therefore, a normal condition would primarily mean when the overnight call money market rates, they are more or less aligned with the policy repo rate. Deputy Governor Michael Patra may like to add or supplement anything. Nothing?
On real rate, we would really like to know what is the government, RBI's thinking. Do you calculate it with this ex-post 6.7? How do you calculate real positive rate? And do you want to get there at all?
Would you like to take that question?
Yeah. So the real rate is always forward-looking, just like the rest of monetary policy. So you should consider the forecast of the inflation rate sometime into the future, within which monetary policy works, and then calculate the real rate.
But you're not given us a Q1 number. You're not given us a 12-month forward number. Do you have any for FY24 first half at least?
No, you have the Q4 number, and from the monetary policy report, you have the 23-24 numbers. Yeah, but as Governor mentioned, you will have to feel your way. It's a very dynamic situation, and we'll have to, see how the future evolves.
Yeah.
Thank you, sirs. I'll move on to Mr. Govardhan Rangan from Economic Times.
So good afternoon, Governor. Despite raising the rates, you have maintained that liquidity will be there, and then and you have again stressed that it will be the extraordinary liquidity will be withdrawn over a multi-year time frame. So there are some economists who are forecasting liquidity to turn neutral by the end of the year. So does your statement mean that you will ensure that SDF is still used, and then there will be funds flowing into SDF over the next 1 or 2 years, even if you are focusing on withdrawal of accommodation?
Now, what multi-year time cycle basically means is that if you look at it, we started withdrawal of liquidity even last year. We stopped the GSAPs. We did not, in other words, we did not announce new GSAPs. We also introduced the VRRRs last year, the variable rate reverse repo auctions. This year we have taken steps. Again, the VRRs are being continued. In the May policy statement, we we increased the CRR also. And so a multi-year would basically mean, as I have said earlier, a 2 to 3 year cycle. And but beyond that, what was your question you are asking? So when you say 2 to 3 year, again, it is very flexible. The situation is very dynamic. It can be argued that we started last year, so last year is year 1, this year is year 2, next year is year 3. But in these extremely uncertain conditions, all that we are trying to convey is that it is not as if we are doing it suddenly, abruptly, in a compressed manner during the current financial year. That is broadly what we are trying to say.
So more than half the multi-year is already over. So that
No, again, that's what I am saying. All that we wanted to convey is that we don't want to take any sort of abrupt, rushed action, which may sort of be detrimental to the system, to the market, or to the credit offtake.
So on the inflation, you also mentioned that you are not in the forecast. You have not mentioned some of the actions that you have already taken, including the rate increase today. So if you factor in that and probably some of the measures from the government as well, how does the inflation outlook for the next fiscal year, which you have not touched upon, how does that look if you are going to have these rate actions have an impact on that?
You see, each action takes its time to play out. Monetary policy actions would take ideally 6 months or 6 to 8 months to fully play out. And so therefore, we will watch the evolving situation. And I think the next year's inflation we give in our monetary policy report, I think we give it. The next report is due in October. So we will give it at that time.
Thank you, sir. I'll move on to Mr. Anup Roy from Bloomberg.
Yeah, thank you, sir. Sir, you mentioned about your aim to come back to the middle point of the inflation. Now, given that you have increased the inflation projection so much, has the middle point shifted in your calculation? And are you targeting more like 6%? And as Dr. Patra recently wrote, has the threshold inflation increased in India after the pandemic?
Since you are referring to Dr. Patra and what he wrote, let Dr. Patra take the question.
Thank you, Governor. Actually, you're misquoting me. It's the case of leading the witness. I have my paper here, and what I have written is that all the parameters that monetary policy deals with, like the target, the threshold, etc., need to be re-estimated with pandemic data. That's all.
Thank you, sir. I will now invite Manojit Saha from Business Standard to ask his question.
Thank you, sir. Monetary policy, in a tightening cycle, monetary policy is most effective when the liquidity is in deficit mode. Do you foresee a liquidity deficit scenario going ahead? That is the first question. And the second question is that I don't see the 4% inflation target in the resolution. So is that something that is in your mind to go back to that 4% inflation targeting, or you are comfortable in the near term to be at 6%?
I think that was exactly the question which I think, Anup Roy just asked.
Right.
And we have said that our endeavor will be move closer to the target. And the target is 4%, plus minus 2 on either side. So that target of 4% does remain. And what is the other part you said?
Liquidity deficit mode, because tightening
You see,
cycle.
liquidity again is impacted by so many other factors. The pace of government expenditure, front-loaded capital expenditure, for example, by the government as it happened last year. If this year also the capital expenditure and other expenditures are front-loaded, it adds to the liquidity. Credit offtake, which has now, we have mentioned it in the resolution, it has now improved. The credit, the credit offtake, the increase is by 12%. And if this increase is sustained, then obviously liquidity goes out of the system. So there are other factors also relating to the forex market, which add or drain out liquidity. So it's a constantly evolving situation. All that we are saying is that we will ensure availability of adequate liquidity. If the liquidity runs into very heavy deficit, which that is your question, then the repo window is always available. That can be used by the system. Yeah.
Sir, that was also my question, but since we were forbidden a second, just to continue with what...
This will be your third.
No, sir. This is just continuing with what he
Okay.
said. You have not said anything specific. No specific liquidity measure has been announced, not CRR, not any other. So should we understand that the normal process of withdrawal of cash and FX sales is enough hereafter to calibrate liquidity?
See, again, in extremely volatile and uncertain conditions, we just cannot give any forward guidance. And we are constantly watchful. In fact, on a real-time basis, the entire team in RBI is watching. And we will be taking action. In fact, if you recall, while reading out my statement, I took a pause when I was talking about implementing the government borrowing program, in the current year in a non-disruptive manner. I took a pause and I explained that I have not said what steps will be taken by the RBI, but as per the evolving situation, as per the requirement, we will be sort of using various instruments which are available to us.
Thank you, sir. I'll move on to Swati Bhatt Shetty from Reuters.
Thank you. Governor, I mean, just if you can give us a little more clarity on what is the most preferred step, because markets were clearly very comforted by that statement you made today. We've seen bond yields come down almost 10, 12 basis points. What is the most preferred step at this point? Is there any preferred measures in terms of managing the government borrowing program? Considering that you are in a withdrawal of accommodation phase, you would not want to infuse more liquidity into the market. So how do you plan to manage that? Thank you.
Now again, a preferred step will depend on, depend on where we stand. But let me say that we are monitoring the GSEC markets. In fact, we monitor all markets. GSEC market also we are monitoring it very closely. Preferred step will again depend on the situation prevailing at that time. You know what instruments are available with us. With regard to, one thing I can say is that with regard to Operation Twist, we have today greater leverage, greater flexibility, because we have enough securities. We don't need to sort of, because of introduction of SDF, naturally the securities which are available to us, which in an otherwise, in a previous context, if there was a reverse repo, we have to give out securities. So today we have enough securities to undertake Operation Twist. This is just a factual information. I am not giving a forward guidance. But what we are saying is that we have greater leverage today with regard to Operation Twist, and we have other instruments at our command. And if our team in RBI comes out with any innovative steps to deal with the liquidity problem, then we will see. But at the moment, there are no innovative steps. So don't judge into any conclusion that another GSAP or something like that. So all that I am wanting to say is that we are watchful and we will do whatever is necessary to, we'll take steps as may be required.
Thank you, sir. I'll move on to Mr. Mayur Shetty from Times of India.
Governor, as you pointed out, the transmission on the lending side has been very effective since most of the loans are now linked to the repo rate, external benchmark. But on the deposit side, it's not been that effective. So do you think that reduces the efficacy of the monetary policy? People might save less, and investments also might not happen because lending rates are going up.
You see, we have instituted this external benchmarking 2 years, I think 2019 sometime we did it in October or so. We are monitoring it, and normally the transmission does take time. We just announced our the rate hike 1 month ago, roughly 1 month ago. It does take time. It takes about 1 or 2 or 3 months. It will take time. But going forward, we do expect the rate hikes to get transmitted also to the liability side, namely to the deposit rates. And I have acknowledged that in my statement also, that the deposit rates have started, bank deposit rates have started going up. And in any case, the banks, when there is a credit offtake, the bank need to mobilize more, resources by way of offering higher deposit rates to the, to the savers.
And one more question I had on the recurring mandates. You allowed relaxation for domestic payments, 15,000, increasing the limit. But people are also facing problems on international payments because a lot of these, for a lot of the providers, India is a too small a market to comply with RBI's guidelines.
Okay, so I got the question. The first part with regard to transmission, if DG Michael Patra wants to add something, you could add. But the other aspect of your question, let DG Ravi Shankar take it.
Since October 1, when we introduced this, so far about 5.5 crore mandates have been registered. The total mandates, not even 5.5, 5.9 crores. The total mandates are about 6.5, which basically means that about 0.6 crores existed before that, and subsequently, these many mandates have been registered. In fact, this surprised us because we thought the total mandates available was roughly around 5 crores. It's more than that. So probably a large part is covered. Out of the, in these mandates, about 3,450 international merchants have also registered. Some of them, like you said, for whom India business is not that significant, will take a little longer to make the investments, to adjust their systems. Some major ones have conveyed that to us, that they will adjust, but it will take a little bit longer. And until then, there could be some issues. We have tried to address some of the things with the recent announcement of increasing the limit. We heard from many people that many international products, magazines, etc., are very expensive. So every time doing it becomes a problem. So we increase the limit from 5,000 to 15,000 this year. That will probably take care. But overall, to answer your question, I think the number and the volume that is left out now is not significant. And with time, that will also get in. You see, at the end of the day, the objective of that e-mandate is that the customer should have better control on his digital payment activities. So that has, that is our ultimate goal, and that will be achieved. Thank you.
Thank you, sir. I'll move on to Gopika Gopakumar from the Mint.
Good afternoon, Governor. This is with regards to a South-based private sector bank, Dhanlakshmi Bank. A minority group, a shareholders group, has raised an issue. They've called for an EGM, saying that there's a financial crisis in the bank. The number of directors on the board have also reduced. Is there a cause for concern? Is RBI looking at this?
See, individual banks and the conditions prevailing in individual banks, we do not discuss outside, and particularly not in a press conference. So I will not comment on any individual bank. But as I have said in my statement, the Indian banking system remains resilient and strong in terms of various critical parameters like capital adequacy, provisioning, profitability, and non-performing assets. Our supervision has been significantly deepened over the last 3 years. Each and every bank in our banking system is monitored very closely, and we have the real-time data available with us. We have all the data with us, and we are monitoring it. I mean, our supervisory officers are, monitoring the situation in every bank very, very closely. Overall, the Indian banking system remains resilient and strong.
Thank you, sir. I'll move on to Shritama Bose from the Financial Express.
Good afternoon, sir. So one question is on tokenization. What do you think is the level of progress on that? And is there a need, could there be a need to extend the June 30th deadline even further? And the other is on linking RuPay credit cards to UPI. Any sense on how the pricing structure for that will work? Because currently UPI and credit cards work on polar opposite MDR structures.
I think DG Ravi Shankar can take that.
On tokenization, with about 3 weeks to go, the progress has been satisfactory. Over the last several months, our teams have been constantly discussing with all stakeholders to ensure that the process of tokenization comes over smoothly, and the system is by and large prepared. All the card networks are offering tokenization. About 16 crore tokens, by last count, had already been created, and this number would pick up, as we come to the deadline, and even as we go beyond the deadline. It's not necessary that everyone should have a token before that. You can always do it even later. So system is prepared. I really don't think there is any need to speculate on whether or not the timeline will be extended. There are a few collateral issues that have come to our notice, which we will adjust as we go. I mean, these are new issues that crop up every time you shift a regime. These sort of issues come up. We will address them as we go. So overall, satisfactory is how I would probably term it.
The other question on credit card linking to UPI.
I think going to the pricing structure is, jumping the gun. We'll see that how it will be priced. The basic objective of linking credit cards to UPI is to provide a customer a wider choice of payments. Currently, UPI is linked through debit cards to savings bank accounts or current accounts. Now this can be linked to the credit card account that banks give you. That improves the choice that the customer has. How the pricing of that will work out, we will have to see, because pricing is something that the banks will have to do, that the system entities will have to do. At this point, we will introduce the arrangement. Pricing, we'll see how it goes.
Thank you, sir. I'll move on to Surbhi Prasad from the Hindu Business Line.
Hello, sir. So the RBI has taken a number of steps on inflation, and so has the central government. But do you think that there's more need for supply-side measures, especially perhaps something on fuel taxes again? And sir, my second question is on cryptocurrencies, because the government has said they're coming out with a consultation paper soon. So has there been further dialogue on the issue? Thank you.
You see, on cryptocurrency, I can say that on all issues there is constant engagement between the government and the RBI, including the cryptocurrency issues. We have given our views to the government. Let's wait for the discussion paper. With regard to the other aspect which you mentioned was about the supply side measures. Now it's for government to take really. And government, I am sure government is mindful of the current inflation situation, and it's for the government to decide on further supply side measures which they consider as necessary. On that, I would not like to, I would not like to speculate, or I would not like to comment on that. It's for government to decide, and I'm sure they will decide if and when there is a requirement, they will take the steps.
Thank you, sir. I'll move on to Vishwanath Nair from BQ Prime.
Good afternoon, Governor. The question is regarding the measures you announced on the cooperative bank side as part of your statement. It's two-part. Firstly, how comfortable is the RBI using the cooperative sort of system to push demand further, because now you're allowing them to give out higher home loans? And the second part is in terms of allowing them to enter commercial real estate. How comfortable are you in terms of the regulation and supervision part of it, because that has been a challenge in the past, especially with respect to commercial real estate? So I just wanted to get.
I think DG Rajeshwar Rao can take that question.
Answering your first question, I think the customer demand is not really generated through the measure which we have announced. Actually, the customer demand is met through the measure which we have announced. In case the banks have the greater flexibility to meet the requirement of their customers for housing loans or higher amount of housing loans. So that is what is being enabled. And of course, these are subject to prudential safeguards in terms of ceilings, prescription of limits, etc. So that will take care of a large amount of the risk which could be enabled through this measure, if you perceive the risk is there. And of course, as Governor has already mentioned, we have a system of very close monitoring of all the banking entities and banking units. So I think the measures, we are in a position to assess the, vulnerability of banks very closely and monitor the situation. So I don't think there would be much of a concern in terms of any risks arising from this kind of a measure.
Thank you, sir. अब मैं आमंत्रित करता हूं अनुराग शाह को from Z Business News.
नमस्ते सर। सर मेरा सवाल सर डिजिटल लैंडिंग ऐप से जुड़ा हुआ था। क्या रिजर्व बैंक जो है किसी और एजेंसीज के साथ पे भी वहाँ पर काम कर रहा है? क्योंकि हमने देखा है कि हाल के दिनों में कई सारी घटनाएं सामने आई है, एक्सटॉर्शन से लेके मुंबई के अंदर ही कई सारे सुसाइड्स जो हुए हैं डिजिटल लैंडिंग ऐप्स के अत्याचार से तंग आकर। तो उस पर क्योंकि आम लोगों के अंदर धारणा यही है कि जो भी डिजिटल लैंडिंग ऐप है उसका रेगुलेशन जो है वो RBI के द्वारा ही किया जाता है। तो किन एजेंसीज के साथ और आप काम कर रहे हैं, और वहाँ पर जो पिछले साल एक ड्राफ्ट नोटिफिकेशन आया था उस पर कितनी और प्रोग्रेस हुई है?
इसी आप जो मेंशन कर रहे हैं कि ये डिजिटल लैंडिंग ऐप्स लैंडिंग कर रहे हैं और तरह तरह की प्रॉब्लम उसमें आते हैं, मोस्ट ऑफ इट जो है उसमें मेजॉरिटी जो है मोस्ट ऑफ इट दे आर अनरजिस्टर्ड लैंडिंग ऐप्स। मतलब जिसको आप वो अपने आप कर रहे हैं, दे आर नॉट रजिस्टर्ड विद द RBI. सो वहाँ पे जो हो रहा है उसमें लॉ इन्फोर्समेंट एजेंसीज जो है, जो स्टेट पुलिस हो या बाकी लॉ इन्फोर्समेंट एजेंसीज हो, उनको कार्रवाई करना चाहिए और वो कार्रवाई कर रहे हैं. कंप्लेंट्स रजिस्टर हो रहे हैं, वो कार्रवाई कर रहे हैं. हमारे पास भी जब कंप्लेंट होता है हम इमीडिएटली अनरजिस्टर्ड लेंडिंग ऐप्स को जो कस्टमर या जो कंप्लेंट करते हैं उनको एडवाइस करते हैं कि आप तुरंत पुलिस में कंप्लेंट करिए, और पुलिस में भी कई सारे स्टेट्स में इफ़ेक्टिव एक्शन लिया गया है. हमारा जो रिपोर्ट के बारे में आप कह रहे हैं, वो रिपोर्ट हमारे पास आ चुका है. दिस डिजिटल लेंडिंग प्लेटफॉर्म्स को जो उसमें क्या क्या मतलब क्या क्या कठिनाइयाँ हैं, क्या क्या चैलेंजेस है, वो रिपोर्ट अभी बहुत एडवांस स्टेज ऑफ एग्जामिनेशन है. बहुत सारे कमेंट्स उसमें आए थे, और जब रिपोर्ट आया था और अभी उस गैप में भी कई सारे न्यू डेवलपमेंट्स भी आ गए हैं, तो हम अभी उसको, इट इज़ इन एडवांस स्टेज ऑफ एग्जामिनेशन, उसको एग्जामिन करके हमारा जो डायरेक्शंस है, जो गाइडलाइंस है, हम इशू करेंगे. और जो अनरेगुलेटेड अनरजिस्टर्ड है, उनको पहले जो कस्टमर को देखना चाहिए कि ये रजिस्टर्ड है या अनरजिस्टर्ड है. सारे रजिस्टर्ड ऐप्स जो है, रजिस्टर्ड लेंडिंग ऐप्स, उसका डिटेल्स जो है RBI वेबसाइट में है. तो मैं इसीलिए जो भी ये लेंडिंग ऐप्स यूज़ करते हैं उनको ये मेरा मतलब एडवाइस है, उनको विनम्र अनुरोध है कि वो पहले चेक करे कि वो RBI रजिस्टर्ड है या नहीं. अगर RBI रजिस्टर्ड है और ऐसा कोई इरेगुलरिटी होता है तो RBI तुरंत कार्रवाई करेगी. ये एश्योरेंस मैं आपको देता हूँ. एक मिनट इसको मेरे को ख़त्म करने दीजिए. और तो RBI कार्रवाई करेगी. बाकी ये आजकल क्या हो रहा है कि बहुत सारे मैसेजेस, मतलब बैंकों के नाम पे भी बहुत सारे मैसेजेस आ रहे हैं, और आपको वो कह रहे हैं कि आप तुरंत उसको क्लिक करिए तो ये लोन मिल जाएगा, या ये फैसिलिटी आपको मिल जाएगा, या आप तो कस्टमर को भी ये एडवाइस है कि किसी तरह की मैसेजेस, बैंक्स बार बार ये कह रहे हैं मैसेजेस में, SMS में, व्हाट्सएप में, बैंक्स बार बार मोबाइल फ़ोन में मैसेज दे रहे हैं कि वो मतलब इस तरह की मैसेजिंग सिस्टम में या फ़ोन करके कोई इन्फॉर्मेशन नहीं मांगते हैं. जो कस्टमर्स इन्फॉर्मेशन जो है, मतलब उसका OTP नंबर या उसका CVV नंबर नहीं, अगर कोई आता है तो तुरंत उसको क्लिक मत करिए मोबाइल फ़ोन में. जो मैसेज आता है उसको नोट करिए. ये मैं सारे कस्टमर्स को कहना चाहता हूँ, नोट करिए, और आपका जो बैंक ब्रांच है उसको फ़ोन करके पूछिए कि ये मैसेज आया था, ये सही है क्या. फिर आप उसके ऊपर आप आगे जा सकते हैं अगर बैंक कंफर्म करता है तो. यस
सर, अभी जो हाल के दिनों में आपने जो 5 NBFC से जुड़े हुए करीबन 1 दर्जन से ज़्यादा जो मोबाइल ऐप थे, उनके जो 5 NBFCs के जो लाइसेंस रद्द किए, तो वहाँ पर क्या इसी तरह की गड़बड़ियाँ थी जिसको देखते हुए आपने उन 5 NBFCs के जो लाइसेंस रद्द कर दिए गए?
नहीं, उसमें कई सारे प्रॉब्लम्स थे, गड़बड़ियाँ थी, इसीलिए हमने लाइसेंस सैंक्शन कर दिए. और इंडिविजुअल एंटिटीज़ में कौन से एंटिटी में किस कारण हमने लाइसेंस कैंसिल किया, ये कहना बाहर मतलब ठीक नहीं होगा. नेक्स्ट वी कैन गो.
सर
नहीं, 2 questions you have asked. Come on.
Thank you, sir. I'll move on to Mr. Ankur Mishra from ET now.
Good afternoon, Governor. I want to ask, sir, in a condition where the inflation expectations remains within your boundaries, where you have projected 7.5% in Q1 and gradual decline after that, will your rate hikes, if at all, will be in that proportion or will be front loaded? How should one read into that with 90 bits already done within 1 month?
I think let DG Michael Patra take that question.
Actually, to correct you, 130 basis points have been done during this year, while inflation has moved up by only 80 basis points. No, I just answered the question in facts.
So how should one read into it, sir?
Actually, I forgot to tell you, you should also take 20 basis points done last year by rebalancing from fixed rate repo to, and we will continue working till inflation is at target or aligned to it.
No, but if I talk about the proportion, which I am saying in a condition where it remains within your expectations, so will it be in the similar proportions? I mean, will it be front loaded?
Never ask a central bank about the course of future interest rates.
I stand corrected. Second, so that is our job to ask questions. Second thing I wanted to ask about the NBFC's provisioning guidelines, which has been released recently. You have released guidelines for upper layer of NBFCs. should there be an expectation that for other categories a similar kind of guidelines will be there till the time, should this expectation will be there?
Okay, I think today everybody is asking multiple questions. In the interest of time and to allow everyone, I would request please just stick to one question. DG Rajeshwar Rao may take that question.
The announcement for increase in provision for standard assets, which was announced, is actually sequel to the announcement made last year under the scale-based regulation, and it is consistent with the measures which we have announced there. And for the other entities, we will take a measure at the appropriate time. So we'll keep it at that. Thank you.
Thank you.
Thank you, sirs. I'll move on to Mr. Laltenu Mishra from The Hindu.
Thank you, sir. Sir, in the April monetary policy meeting, you spoke about the tectonic shift that is happening post the COVID. Recently, we heard JP Morgan CEO talking about a hurricane coming on our way. Even Elon Musk spoke about he's having a super bad feeling. So, what is your assessment of the global and Indian economy and how better or badly placed we are? Thank you, sir.
So, in that sense, RBI is ahead of all others. In the April monetary policy, I had used the word tectonic shifts. Thereafter, the IMF used the word earthquake. Then now you are referring to somebody referring to hurricanes, somebody referring to other, super bad feeling. So, but Indian economy has remained resilient. Indian economy is well placed to deal with the challenges emanating from the geopolitical developments. The banking sector remains resilient and strong. Overall macroeconomic numbers also, broadly they look all right. The exchange rate so far, the depreciation, India is among the better performing currencies among the EMEs, among the EME, comparable, the EME peers and others. The fiscal deficit number which was there in the budget for the last year, that also has been achieved. I think whatever was the target, it has improved. In fact, I think they had projected 6.9 and the fiscal deficit number is 6.7. Correct me if I am wrong, but that is my recollection. So overall, Indian economy continues to be in a resilient position. The recovery is gaining traction, and it is reflected in the fact that capacity utilization has improved, as I have mentioned in my statement. Bank credit also has, the disbursal of bank credit is also picking up. Rural demand and urban demand are also showing signs of further improvement. So that is how we stand, and that's how I would reply to your question. Thank you.
Thank you, sir.
Thank you, sir. With your permission, last two questions I will take. I will invite Siddhi Naik from Money Control.
Thank you, sir, for the question. Firstly, I wanted to ask you if there is any banking system liquidity threshold that you are targeting. And if there is a withdrawal of liquidity going forward, so would that mean that the call rate would be aligned to the repo rate than the SDF going forward?
I think you take this question.
No, if you recall, in February 2020, before the pandemic started, we had announced a revised liquidity management framework. And the difference there, one difference to answer your question was that we removed all quantitative indicators, like we used to have 1% NDTL and all, that was removed. So the way you judge liquidity is by the rate. So if the call rate is, as Governor pointed out, at or below the floor, we are accommodative. If it is closer to the repo rate, we are neutral. And when it's above it, it's tighter. At the current time, the call money rate is at the corridor's floor. So we are accommodative. The liquidity that is absorbed every day into the lab, that is the surplus that markets give to the RBI, is in excess of 5 lakh crore in total. So there's abundant liquidity there. And at the same time, credit growth is picking up. Credit growth really is a function of demand. So it's already into double digits, and liquidity is not a hindrance or impediment to that credit growth so far.
Okay, thank you.
Thank you, sir. And I think I'll invite Mr. Jigar Pathak for the last question.
Thank you for the opportunity. Governor, you mentioned about the economy, the resilience of the economy. I wanted the view about trade deficit, which is at record high right now.
Trade deficit?
Which is at around 23 billion right now. So what is the overall view of the Reserve Bank of India regarding trade deficit?
I think I touched upon it in my statement. There's a section on external sector. My statement has already been uploaded in the website. There's a statement on external sector. There's a para on external sector in my statement. We expect the current account deficit to remain at a sustainable level, and the normal flows will take care of, will enable us to meet the financing of the current account deficit. Exports on the whole are rising. Imports are also rising. Higher exports is a good sign for the economy. Higher imports also, to the extent that there is import of capital goods which have incidentally gone up. That also augurs well for, that means that there is capital expenditure, there is investment which is taking place or is going to take place. So overall, the current account deficit is expected to remain at sustainable levels, and the normal flows will enable us to finance that.
So it has been staying above 20 levels for quite some time now. So is it a matter of concern?
No, we are constantly watching it. At the moment, we are not, please factor in the, the huge reserves that we have. It's 601.1 billion US dollars. That is the latest number I have, and that was last Friday, 3rd of June, that I gave out in my statement today also. So we have built up strong buffers, which will help us in situations like this, if what you are saying materializes. But as far as I am concerned, as far as RBI is concerned, we do not foresee that kind of a crisis situation. Our capital buffers and the normal inflows will ensure that we are in a position to finance the current account deficit.
Thank you.
Has everybody asked, or is there anybody still wanting? Okay, I think you can conclude.
Sir, there was some request for second question, but I think we are out of time right now.
Yeah.
So we will wind up right now. So with this, we come to a close of the press conference. I would thank the top management of Reserve Bank for being here, and our media colleagues for making a very orderly press conference. Till the next time, stay safe, all the best. Thank you very much.
Thank you. Thank you, everyone. Thank you.